Hello, welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, then please subscribe to my YouTube channel for regular market analysis. And do not forget to check out the Forex analysis playlist on my YouTube channel for the analysis of other pairs like Euro USD, GBP USD, and many more. So let's get started. So this is the 4-hour chart of gold USD in front of us right now. And as we all know, there is not much movement going on in the chart of gold USD. The picture is very much confusing. So let's try to understand what is going on in gold USD. Let's see what should be a strategy for Monday. So let's get started. So first and foremost, if you have watched my previous videos, then you can easily recognize these levels, and these levels have not changed because there is not much movement for the last 2-3 days. So right now you can see that the market is almost flat here. Okay, so before jumping to the strategy part, let's do the step-by-step analysis so that you do not have any confusion regarding the chart of gold USD. So first and foremost, let's discuss about this level 1750. So 1750 was previously was a support for the market. Okay, it was a support for the market, and when there was a sharp fall on gold USD couple of days ago, 2 weeks ago, the same level became the resistance, and the same level has again converted itself into support again. Okay, so just look at the 1750, how fast it is changing the picture. Previously it was the support, then it became the resistance, and again it has become the support. SRS. Funny. Okay, so 1750 is the support on the chart of gold USD. Okay, so if you do not have these lines, then please draw these lines so that you can understand the chart better, so that you can also do proper analysis and also trade better. So 1750 is the support for gold USD. And on the other hand, you can see that 1790 has been marked as a resistance, because previously 1790 was a very strong support for the market. Okay, and when market broke the 1790 level here, so the same level became the resistance. And right now you can see that when gold was very much bullish here, okay, when gold was very much bullish here, the same level acted as a resistance for the market. So there should not be any doubt in your mind how this support has become resistance, because right now you can clearly see on the chart that 1790 is acting as a very strong resistance for the market. So 1790 is the resistance and 1750 is the support for the market. And if we go to the sentiment meter here, this is the Forex sentiment meter, and here you can see that 46% retail traders have taken short position and 53% retail traders have taken long position. So 46% are thinking that market will be going down and 53% are thinking that market will be going up. So retail traders are also very much confused right now. They are also not sure whether the market will be going up or going down, because we are also not getting a clear-cut sign from them. And you will get the Forex sentiment meter on my website avilashhazarika.com under Forex 101 section. And my dear friends, recently I have also launched a pro trader membership program where you can be a part of my analysis for just $15 per month, and where I'll be sharing my best trading opportunities, the best trading opportunities that are available on the market. If you're interested, then you can go through all the information, and also you can click here pro trader tab. You'll get all the information. Okay, so you have understood the support and resistance on the gold USD. Now comes the important part. Okay, support and resistance is simple, but now comes the important part. So listen to me carefully and try to understand my words here. Okay. So 1790 is a resistance and 1750 is a support. But you can see that after reaching the 1790 level, gold did not go up. Okay, which means that sellers are sitting at this level, or market is getting resistance. So as per the basic theory of the market, if market fails, okay, if market fails to cross a resistance, then it should go down. But you can see that gold is standing at the same level for 2-3 days and it is not coming down. Rather, market is flat here. Try to understand the market psychology here. It clearly means that buyers are still present in the market. Okay, after hitting the resistance level, they are still giving a tough fight, which clearly signifies that the buyers have not surrendered yet and they are still giving a tough fight to take the price upward. As a result, market is still standing at a resistance and not going down. Therefore, market is still confused right now. Therefore, you should not initiate any position. Okay, shorting the, you should not short the market also right now, and you should not go for buy also, because see, there is no logic for buy here because we have a resistance. Market has not crossed the resistance, so you should not go for buy. On the other hand, you should not go for sell also because market is not ready to go down. So in that case, you should wait because waiting is also a virtue. You can see that I have also drawn a line here. My dear friends, I'll also request you to draw this line so that you can also understand understand the market better. That's it. Okay, so see, in market there is a concept called volatility. Okay, market there is a concept called volatility. Whether it is a stock market, forex market, commodity market, does not matter. Volatility is extremely important in the market. Right now you can see that there is not much volatility here. Market is flat, and in market, okay, volatility shifts, or in simple words, listen to me carefully. Volatility shifts means if a market if a market is flat, okay, then market is gathering strength. It means that market is about to blast. It doesn't matter whether market is going up or down. Okay, market will blast. If a market is flat here, then market is gathering strength. On the other hand, if a market is very much volatile or very much aggressive, okay, then after a certain time you'll see market getting flat. It means that market has got tired. It is taking a rest now. Market is just like us. Okay, if you run for 100 meters or 200 meters, obviously you will need to take rest and you will breathe a little. Similarly, whenever you'll see market lying flat like this, then you'll get the confirmation that yes, market is gathering strength and it will blast. Therefore, next week is very important for gold USD, and there is a good possibility that market will be blasting either upside or downside. See, till now we do not have the confirmation whether market will be going up or down. After all, traders like you, traders like me, we do not decide the direction of the market. What we can do is that we can just follow the trend. So right now your duty as a trader is to wait for the market to either cross this level 1790 on the upside and 1774 on the downside. Just draw a line like this and wait for the market to cross. Once you'll see market crossing either this level or this level with volume is a big candle, then you'll get the confirmation that yes, volatility is back in the market and market is about to blast. Okay, so if market goes up, you need to buy, and if market goes down, you need to short the market. And if you go to DXY chart also, then DXY chart is extremely bullish right now, and you can see that it is coming down for consolidation. Okay, there was a previous resistance here, but right now it seems that after consolidation DXY will be going up again. So do not be concerned much about DXY. Okay, right now there is not much volatility in the gold USD chart. Just wait for the perfect time when market will be blasting or volatility will be back, because yes, it is volatility will come down. If it crosses this line, go for buy. If it crosses this line, go for sell. That's it. So this is it. Hopefully you've understood. If you have liked the video and found the video informative, give a thumbs up and subscribe to my channel for regular market analysis. Thank you so much. All the best. Take care. See you on Monday again. Bye bye.